Fantastic. I think we are live. I'm just going to copy and paste this and share it in a few groups and give everyone a moment to tune in, and let me know if this is coming through loud and clear, guys, but it should be. Fantastic. Okie dokie. Not frozen? No. Okay. Let me know in the comments, guys, if this is, yep, fantastic. Okay, loud and clear. So tonight we are going to be going live to discuss a range of markets. So I really want to tie it all together tonight for you. And we're going to focus in on gaming and NFTs, some of the crypto markets and that narrative that I think is the next big thing. But really a focus on what's going on with the Fed and all the other markets, tying that together as well. So guys, I know it's been a little bit last minute. Share around with your friends and your crypto groups and your chats, and we'll give everyone a minute or two to tune in if you're rewatching this at a later stage. And then we will get into it. Come say hi. No dad jokes tonight. So I'll share this in our group as well. And a big welcome to 85 new members so far this week. And guys, if you are new to our group, please navigate your way around, read those pinned posts, check out all the research in the unit section. And we've just upped our team for developing this app. So the project and the new platform is going really well. We've got a couple of hundred people there onboarded and ironing out all the bugs. But in a nutshell, what's happened there, we were really hoping to be live with it all by now. But basically what we built in the platform was aiming to accommodate for 1,000 people initially, 2,000-ish capacity. And in the last 2 months in our premium group, those of you that are in there, you'll know that we've had 1,000 people a month join. So we're nearly up to 4,000 members now, and we've kind of strained the app for what it's capable of. So we've had to hire some more devs, I guess, and we really want to make that ready for 5,000-10,000 people, particularly for the research side of things. Not so much for the community. It's more just, we want that to be as smooth and as good as we can on day one. So yes, it's all coming. It's all very close, but I guess it's a good problem to have. Unfortunately, we've had a lot of people join and show interest. And look, the Facebook group's running really well, but we're very aware that a lot of people don't like Facebook, and that's fair enough. And we don't really want to be on there, but for the time being, it is still where we are. So thank you all to the 147 of you that are watching. If you smash that like button, it does help us out and help others find the stream. Just a quick look at Bitcoin. So far, what I'm looking at here is whether or not we just form a nice little bull flag and have another leg higher, or if this is something different, if we actually break down. But as always, as we're going to tie this all together, it really does depend on what the US dollar is doing. And this is a little bit hard for me to read, to be honest. So chopping around on the Fed meeting last night, which we're going to talk about as well. I know Troy, who I've been learning more TA from. So you're never too old to learn new tricks, guys. And those Troy and Kyle in their course talk a lot about these broadening wedges, which is something that I hadn't paid much attention to. But this is the type of pattern that we're looking at to resolve, and it didn't quite get that cup and handle breakout there. It continues to be rejected. So this is the dollar, the DXY index going down. And if that happens and we don't get that breakout, which a lot of people were sort of looking for, if we go all the way back down, towards these levels, then that's when everything that's priced in dollars can have a big run. So that's when Bitcoin can boom, gold and silver. A lot of these charts look very similar in the sort of patterns that they're putting out there as well. And to be honest, the stock market does not look great. So technically, when we look at this pattern, let's just get rid of this. Was the projection from the cup and handle that was taking us all the way up here. Now that's a pretty crazy number when you consider where we are, but actually if you compare stocks historically to the amount of money that's being printed, then that's very normal. So if we look at the money supply in America, and traditionally a lot of assets have sort of mirrored the amount of money in terms of the ratio. So if you double the money, then over time, double the money will end up going into stocks and property. That's the sort of, very easy way to understand it, oversimplified. So when the Fed flooded markets with liquidity here, all of a sudden they go from $15 trillion to 18 or 19 trillion, and there's a lot of money at the moment a lot of it is sitting in reserves at the banks, and that's really important for when we get into some of these discussions about what is QE and why aren't we seeing big inflation if you print $4 trillion. Some fascinating discussions with the smartest people in the room, and I was lucky enough to sit down with Brent Johnson again recently. So we're just editing the audio for that because there was a chat that went for over an hour, and Brent's microphone came through very, very loud. So I want to get that audio really nice for you guys to listen to, because there's honestly one of the best interviews I've ever done. So this is the last catch up we did back in May when we were talking about what's going to happen with the dollar. Obviously it's gone down a lot. A lot's changed, particularly in my theory about where stable coins are going and how that world is going to play out. But yeah, that is one that you don't want to miss with Brent and also Raoul. So the most popular video we've ever done that got 250,000 views, Raoul and I sat down again the other day, and it is just amazing to speak to these guys. And more so when I develop these thesis about where I see the crypto markets going, DeFi, and a few of these other ideas, and I run them by these guys, and they kind of pick up other things that I miss or don't understand from their background as well. So getting to bounce the ideas off them and hearing what they've got to say about it. And Raoul was blown away by some of the DeFi and the lending and all those markets that are happening. And it's going to come down to crypto is now a big competitor in the macro world. So we've got our banks that can sort of create that money through the loans, and at the moment they've got trillions of dollars that are just sitting there as reserves, so they're not in the real economy yet. And this gets down to the argument about whether or not a bank that now has $1 trillion that it never used to have, and that's just in reserves, and legally they can't speculate with those reserves. And so the Fed is saying, well, they can't buy stocks with that money, so don't worry about that. That can't cause stocks to go up. That's basically the argument. But what I'm sort of saying and asking these people is, well, you're robbing Peter to pay Paul. Normally, Jamie Dimon and JP Morgan, they've got to find $1 from somewhere to have reserves. And now you've given them $1 trillion. All that money that they otherwise would have had is now free to go and speculate. And the appetite just isn't there from small businesses. So they create these big programs and say, hey, here's $400 billion, here's $700 billion. This is there for these small businesses, and 99.8% of it is untapped. So it's not getting out there. And all the big businesses that have got a heap of money, Apple, they've got hundreds of billions of dollars on the balance sheet. They don't need money, but they're coming and they're borrowing heaps, because for them it makes sense to borrow at basically 0% interest rates and buy back their stock. And that means that it's less, every share that they buy back is one less share that they need to pay, say, a 1 or 2% dividend on. So for them, it makes sense to basically buy back as much shares as they can, because they're paying 0% on that money versus paying out 2%. So this is that self-reinforcing mechanism that's another factor propelling stocks higher, but it's creating, I guess, wealth inequality, you can argue as well. It's the haves and the have-nots. And one thing that I think is going to be very interesting to see is whether or not more companies do what MicroStrategy did. And in the last few days since they said, hey guys, we're thinking about buying some Bitcoin, and then they did, and then they said, we're thinking about buying some more, and literally a few hours later they announced, well, we have bought some more. The stock's up 20 or 30%. Now, they had a spare $400, $500 million, which would be nice for all of us. But what about these companies like Apple that have a spare $400 or $500 billion? And if these companies start to perform well or hold up better in a crisis, other companies are going to want to do the same thing. And the quote that they had here, if we just go and have a look, about the US dollar and picturing that huge pile of money that they were sitting on as basically cash, a melting ice cube, I believe was the word here. That's so significant. So we just had an awful realization that we're sitting on a $500 million ice cube that's melting. This isn't speculation. It's not a hedge. It's a deliberate corporate strategy to adopt a Bitcoin standard. So we talk about the hardest money, the most finite, the most scarce. It can't be printed. This is such a historic statement. And, it's been in the news. It's been pretty big. But I don't really think it's clicked with the mainstream or the other 500 companies in the S&P 500 or, stocks in other parts of the world. And it's one thing to have citizens and individual investors like you and I say, hey, we want to protect our wealth, particularly in some of these other countries that are getting smashed with hyperinflation. But when big corporates start saying, hey, we actually want to protect the cash that we've earned from being devalued, that is enormous. And the next step after that is, the bond market. And we're going to get to all that in just a second. But that's basically a bit of an intro of what we're running through. So we might go through the macro stuff first, and then I'll do the crypto stuff towards the end. And we're up to 300 watching now. Someone said they can't hear anything. It should be coming through just fine as far as I'm aware, guys. So the Fed last night, they had their big meeting, and it's always funny. Stock markets tend to kind of sell off a little bit into these Fed meetings, and it's always the same result. Basically, the Fed say that they're going to keep printing money and this, that, and the other. So we've had a little bit of a rally from the low in the last few hours. But what I'm looking at here is basically this technical pattern where we broke out, and now we've broken back below, and we've tested this twice and a lot of wicks here. So the Fed didn't announce more. That's basically the takeaway. But what they did do was tell us that rates are going to basically be zero here until 2023. So that's another 3 years. And then, as always, these magical dot plot graphs, everything's just going to go back to this Goldilocks 2 to 3% growth. The Fed are targeting higher inflation than that. So if things are down here for that long, are they going to try and aim for 7 or 8 or 10% after that? I'm not sure. This is kind of the new policy that they're talking about, and the gap between the Fed's target rate and what inflation might be, and that real interest rate that's currently negative. So everyone's losing out, and that's why they're trying to get you to go and spend. But I just think this is wishful thinking that rates are just going to be zero, then magically back at 2 to 3%, and everything is going to be normal after that. So look, the market didn't get more money, which is what they were always hoping for. But at the moment, this is the most important level. So around 3,400, let's call it, and rejected there twice. There's a lot of downside if markets aren't happy. But honestly, do I think that we're going to crash? I don't think things are anywhere near as bad or as fearful as during this leg down. I just pointed out the fact that we've got trillions more dollars being printed in the US and all these countries around the world that can all flow into stocks. People are feeling pretty wealthy. Look, I'm not in this camp that we're going to have this almighty stock market crash. They're just going to flood the markets with money. They don't want a crash. They've got enough problems to deal with, and I think behind closed doors, they don't really care if a few people complain about how stocks are overvalued. They'd rather that than a crashing stock market and all these other problems that they're trying to solve. So yes, Ray Dalio and others are all talking about the dollar losing its reserve status. But one thing that I think is really interesting here is the fact that we have all these dollars, tens of trillions of dollars outside of the US. And you hear about this, they call it the euro dollar system. It's got nothing to do with the euro, but that's just the way we refer to it. The Fed have got to print money to look after their own economy. But there's all this money and all this debt that's denominated in US dollars outside of the US that needs to find dollars from somewhere to pay down the loan that they took out in dollars. Okay, so if the Fed print 3 trillion to solve America's problems and the world is in an even bigger problem, they're desperate for those 3 trillion. So they're trying to pull money out of the US as well. And so this market that's kind of unregulated, and the Fed are kind of in control of it, but they're not as well. So should the Fed have to print money and give it to the rest of the world? Well, this is where they've had to open up swap lines. But even if they do that, Australia's still got to pledge some Aussie dollars and then pay that loan back in a certain period of time. And often these are pretty short-dated sort of borrowing and loans. So this is the big problem around the world, that the US dollar as a reserve currency, it's actually hurting America in some ways, as well as all these other countries. And if the dollar strengthens and all these other developing nations that are on their knees, if they get hurt even more with that, that is really bad for the global economy. Here's a nice big pie chart. With these low negative interest rates and real interest rates being negative, that is the big game changer. And this is the tiny little percentage of pension funds that have got about 50 trillion in assets. That's their exposure to gold and gold stocks. Tiny little slither of Bitcoin exposure from pension funds, mainly, I said here, through all the companies around the world that would own MicroStrategy. MicroStrategy own $500 million of Bitcoin now, so I guess you can say indirectly they've got a tiny little slither. But this is a lot of money that's all parked in stocks and real estate and all these other assets, and a lot of that is denominated in US dollars. And if people are worried about the US dollar being printed, or the US government are going to have to issue so many bonds to try and pay down these huge deficits. So at the moment, this year, this is really important to understand. This year alone, they've spent $6 trillion so far. But the deficit's $3 trillion. So what that means is, well, how do you fund yourself as a business, as a family, or as a government is slightly different, but you get money from taxpayers. That's pretty tiny in the scheme of things. But you issue bonds. And what we've seen here is that the market is not buying up the US's bonds like they used to. So they're worried that the currency that they used to love, US dollar, world reserve currency, you can still get 2 or 3% in a savings account. That's pretty good compared to Europe that's been at zero for like 10 years. The longer dated bonds in the US are giving 3%. That was a really Goldilocks scenario for the rest of the world. So everyone wants dollars, but that's all changed now. The Fed is saying we're at zero for years. Why would you buy a bond, sort of thing? That's what people are thinking. So the Fed's balance sheet has jumped from around 3 to 6 trillion this year, and that is the 3 trillion that they've basically bought to help the government out. But they haven't stepped up and bought the other 3 trillion. So that is why the US are running a massive deficit, and the rest of the world don't want to buy those bonds like they used to. So people are now saying, well, if the Fed aren't going to buy them, or even if they do, if the Fed's the only buyer, it kind of goes down this path of modern monetary theory where if the central bank is just going to buy it, well, what's the point of really having a bond market? Shouldn't the central bank just give the government money and they can spend it? And the government says, well, why would we even do that? Let's cut out the central bank and let's just spend money. And this gets us into this sort of stimulus talk about what happens next. So not only do we have global central banks now saying that going negative didn't really help. It was meant to try and get people to think, well, you're going to be penalized if you keep money in a bank, but instead they saved more. Instead of going out and spending, they actually said, well, we need to save more money because we're no longer getting dividends or interest rates in a saving account or money on our bonds. So a lot of people in Australia, in particular Philip Lowe, the central banker, has said this for many years, that negative interest rates don't really work. So if you think that all this money printing has kind of reached its limit because all these other countries are kind of becoming Japan, where Japan and the central bank was the only buyer of all their bonds, and then they started running out of bonds to buy, so they started buying stocks and property, and it's all just a phony market. So we're in this situation where a lot of businesses are in trouble, but they don't want to borrow from all the reserves that the Fed has printed and given the banks. So how do you sort of stimulate the economy? Well, typically, you drop interest rates and you print money, but they've kind of exhausted that this time. So the big question is, well, how do you actually stimulate? And this is why the Fed are talking about aiming for a higher band than normal. Rather than 2 or 3%, they're going to aim for higher than that, and even more so if they miss that target. But where this all ties together, I think, with crypto is that the next stage here is maybe the Federal Reserve, they come out and they announce Fed coin, and they get everyone to download the Fed app, for example. And if they give everyone $100 or $1,000, or we go to even more of an extreme and we say that everyone has a universal basic income and they just get $1,000 every fortnight of this new digital money, which is just, it's almost just like Tether or USDC stable coins. Now, if everyone has that money, that's going to be pretty inflationary. People are going to go out and spend that. That's not at the bank in reserves waiting for a business to come and take a risk and get a loan and that type of thing. So that's where I think that there's not a good understanding even from the experts. And if Donald Trump sort of finds out and someone tells him about this and he says, well, you know what, I want to download, let's make Trump app and Trump coin, and he's everyone's favorite because he's giving out free money. And obviously this has huge consequences and repercussions longer term, but everyone's going to want to give out that new digital money directly to people and bypass the banks. Now, the central bank don't like that if, let's say, Trump takes over, because it makes them less relevant with the idea of the bond market, their normal open market operations, interest rates, creating money. It takes power away from them. Now, Jamie Dimon and JP Morgan and all the commercial banks, they're not going to like that, because they're the ones that get to normally, loan that money and create that money from their reserves. So there's a lot of people that are about to be treading on each other's toes. And I really want you to understand that. It is just so, so important. And it's very different to all the QE and all the bond buying programs, even buying mortgage-backed securities off the retail banks and the pension funds or whatever it is, buying assets that are distressed or gone bad, and taking the bad asset and giving the bank or the fund or whatever money to replace that. That's a kind of a one-for-one exchange. Whereas what we're going into now, if they start to want to give out money to everyone, and maybe Jamie Dimon says, hey, we've got all these reserves, maybe let's run a special. Everyone that opens an account with JP Morgan gets $1,000 of these digital coins, and we can afford to do it because we've got reserves, or we don't even really need reserves because of the sort of fractional lending. Central banks and policymakers are now saying you don't even have to worry about the fractional reserve. Just we want you to create loans and lend. So it's just such an interesting dynamic to think about where this is all going. Obviously, China and the digital yuan, they want that to monitor everyone, and they're already joining the social credit system, your credit score, what you're allowed to do and not do with the currency, their digital currency. So that gets very scary when we go down that path. But I think you're seeing where I'm going, where everyone is going to want this power to make their own money. And then you can say there's another player as well, which is the corporates. So you can argue that USDC or Tether, the Gemini dollar, and even Facebook's Libra, these are all just basically stable coins as well, but run by corporates and businesses. So you've got corporates, businesses, tech stocks that are getting into the world of having their own money. Then you've got governments, then you've got central banks, and then you've got retail banks. Then you've got all these other maybe smaller businesses that want to have their own little tokens and coupons and reward currencies. But then we get into the whole world of crypto as well. And that obviously is far more scarce. So compared to all these trillions of dollars that's going to be printed, there's only, however, that small pool of funds, 200 billion market cap Bitcoin at the moment, for example. So it's just a matter of time and education. And if you think about all this money as just these big pool of funds, it is going to flow from the people, more stocks are always being issued. Or if a company gets in trouble, they can sell more shares. We see that a lot in the mining sector, for example. So at the moment, it's all rosy when companies can buy back stock and get their bonuses, but maybe policymakers say, well, we're going to clamp down on buybacks. And then when companies get in trouble, instead of buying back shares, Apple are going to have to issue more shares. So Apple have got a money printer that can go brr by printing more stock. Governments are starting to run huge deficits and their money printers going brr. Central banks have printed record amounts, and they've got this barrel of unfunded liabilities that they know that all their governments are looking at. Then you've got Europe, which is all sort of fractured, and the ECB is trying to manage these individual countries, and that's all messy. So when people say things like the dollar's going to die, it's all so relative. You say, well, against what? If you tell me the dollar's going to zero, against what? Are you talking about another currency? Are you talking about the Turkish lira, the Aussie dollar? Are you talking about gold? How many people would have thought that Australia, that is, Melbourne's still in stage 4 lockdowns, and here we are with our currency. And a lot of you were watching that video that night when I said that this is probably a capitulation low and we're going to get some sort of bounce here. Now, I did not imagine that we were going to get this 35% rally and the Aussie dollar would be the strongest currency just about in the world of the top tier economies, at least. Who would have thought that was possible? So it's all relative. Australia's economy is not the strongest in the world at the moment. We've just entered a recession for the first time in 30 years. So yes, our currency has gone up, but it's all relative. We're doing relatively better to others. And again, really important point to understand. Gold and silver, let's just have a quick look here. So our size of the bond market that I spoke about, $100 trillion. So instead of having a bond which has a price, so you might buy a bond for $100 and you also get a yield of 2%. But when rates go negative, and I've done a whiteboard video on this if you want to watch that for more details, but basically when interest rates go negative, a bond that has 2% yield, all of a sudden that looks a lot better. So someone might say, hey, you bought that for $100, I'll buy it off you for $102, $103 because it's got that better yield. So this is a huge, huge market, $100 trillion. But all of a sudden, if you're not getting a yield, and central banks are the only ones that are buying bonds, and these markets are all just a little bit, phony, that is a lot of money, particularly with negative interest rate bonds, which we know there's about 14, 15 trillion of those at the moment. Let's say that goes up to 50 trillion, and people say there's no point even thinking about bonds anymore. Gold is that far, far better option at that point, and there's a lot of money from this tiny little current market cap of gold, and the gold stocks would obviously be on fire at that point. Silver's even smaller again. I think the market cap of all above ground silver is like $50 billion or something tiny. So on par with Ethereum or something like that. So there's a lot of money that is looking for a better home. All the stocks put together, 70 trillion. People might not like stocks. Then we've got real estate, so about 10 trillion. And think about everything that can be tokenized as we get into this next conversation, the crypto side of things that I want to get into. The world is really changing, and all of these assets, whether it's a share, some real estate, or even a bond, we can start to create those in the crypto world. And at the moment, the yields are far higher and far more attractive. So again, thinking about this concept of a pool of money, is it going to flow to the place where you can get negative interest rates, or is it going to flow to the place where you can get a higher yield? And there's a growing economy, one of the only sectors that's not overvalued compared to everything else. So that's kind of what I'm looking at there. Just quickly, technically, I think a lot of people are saying gold's broken out to its new record highs, which is very true, and it's forming this kind of flag pattern. Let's just move these around a little bit, have a play. At the moment, this can be a very healthy flag pattern before we move higher again. But I think the important thing to note here is if we actually look historically and take into account inflation, gold hasn't made a new all-time high yet in US dollars. And particularly if we go all the way back, to the 80s and whatnot, if you take into account inflation as well, gold has got a long, long way to go. And I really do think if they can't find a way out of this, and they keep muddling along, just telling everyone that everything's okay, I really do think that numbers like $5,000 gold are on the cards over the next few years. It sounds outrageous to say, but there's $100 trillion that gold might be an absolute no-brainer as a better option to park in than any fiat currency or any government's bonds. So that's the way you've got to think about the potential upside. Other markets to look at, silver's very similar, more volatile. A couple of ways you can draw this, as you guys know, but these are all just nice continuation patterns. Beautiful here. Look at this, touch, 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 touch. It was resistance. We had a pullback, and now it's come back and it's support. People say TA doesn't work. This is just like beautiful, perfect example of TA when you look at this silver chart here as well. If you actually have a look at that measured move of this pennant, it probably takes us up towards the old all-time highs, does it? Around 46. So it'd be nice if the Aussie dollar keeps getting weaker and metals keep going up. So in terms of macro, guys, that's the concepts that I wanted to introduce you to tonight, and I'll take questions on all this stuff as well towards the end. Thanks to everyone that is smashing that like button. We've got 131 likes out of 490 people, so I appreciate it. I am going to take some questions. I'm going to whip through some crypto stuff. But those concepts that we just discussed of stocks can be printed, currencies are being printed into oblivion. It's not just, people so often think about and compare to the US dollar, but there was a good article the other day talking about how Bitcoin is already number 6 in terms of global currencies. So when people say to you things like, they'll never let it happen, or Bitcoin can never compete with these other global currencies, it already has. It's already surpassed, I think it's 170 of the world's global currencies. That's pretty astonishing in terms of achievement there. Can I find this for you? It was a great story by Decrypt. It doesn't matter if I can't, guys. You guys trust me. You get the point. But the only currencies that are left to go to overtake for the Bitcoin is the US dollar, the euro, the yen, the yuan, and the British pound. So Bitcoin is coming. It's going to come and knock those off one by one. And imagine if we lived in a world where gold and Bitcoin are the two largest currencies, the most widely held. So that would be pretty amazing. Okay, so let's get into the gaming NFT and the next sort of narrative that I see building. So look, this is nothing new. At Nuggets News, we've always tried to do our research and fundamentals and get in front of the big trends early. And it's a high risk space, but overall, I think we've done pretty well at capturing a lot of the upside in the good coins, particularly DeFi. And a few months ago, or even a year ago, when I did these top gaming projects, we've planted a lot of seeds, particularly in 2020. So, Wax, Red Fox Labs, Gods Unchained. These are the things that I just thought were so fascinating. And look, the time is right. So at the start of the year, the Aussies of you will know that CoinSpot asked me to make a couple of indexes or bundles or whatever you call them. So one of them was sort of like just a top 10, bundle, ETF, index, whatever you want to think of it as. The other one was the DeFi bundle. Now the coins in here are up thousands of %. So that was phenomenal. Now, recently we've taken those down because a lot of people, I think they thought that these were like an actively managed fund and we were going to take profits for people and we were going to add new coins and, this, that, and the other. And we kind of, we were getting a lot of questions to customer support and so were CoinSpot. So I think they had to take them down. But the other one that performed, it still performed well. And I think it was up hundreds of %, not thousands of % like the DeFi coins. But this one is the sector that I thought had so much promise. So that was gaming and tech or web, or you've heard me talk about D-Web, decentralized web, Web 3.0, rebuilding the new internet. So decentralized file storage, prediction markets, computation, VPNs, all those different layers of the entire internet and tech stack that we want to rebuild. So that's probably a section that I think is a little bit further behind. At the moment, I just want to focus on gaming and NFTs because it's really taken off in the last few weeks. Wax and a few of these companies, these are companies that had millions of dollars invested in them. And I think Mike Novogratz, his fund Galaxy, lost like $70 million investing in Wax, and it was down 99%. But again, doing our research, looking at the fundamentals, this was one that I did pick up and dollar cost average into when it was down 99%, because they were partnering with, Disney and some of these big companies. And as you've seen more recently, they've started to have token sales and NFTs, and they've got an exchange, and there's things happening there. Okay, so that's what I like to see. And now the narrative is clicking into gear. Red Fox Labs is another one that we've had on the channel 3 times over the past 4 years. And more recently, those of you that listen to the chats that I did with Benny and the other interviews that he's been doing, I highly recommend you sign up to their newsletter, because basically, in a nutshell, they haven't wasted or spent any money on marketing for the past 4 years. And that is why, again, these coins are just, I think the market cap when I interviewed him was $500,000. Now, it was only on one little exchange, and it's pretty hard to get your hands on any because it's so illiquid, pardon the pun, on liquid exchange. But I think obviously now that they've got more going on, they're talking about these bridges to different chains. And I think if you're going to go in the world of NFTs and gaming, you've almost got to have a bridge to Ethereum. And they obviously did their token sale on Wax. So being a Komodo-based project, I think they're already pretty aware, and they've spoken about publicly the need to be on multiple chains, which is very, very cool. So as you guys know, as soon as you're on Ethereum, well, it's one click to go to MetaMask, create a Red Fox Labs Uniswap pool, balancer pool, try and get it on Kyber, and that way it becomes a lot more accessible for people. And more importantly, you can link all the technology. So all the dApps, they can all be plugged in to the DeFi money Legos. And there is a big overlap between DeFi, NFTs, and gaming. So NFTs aren't just game items like swords that we talk about, okay? What we've seen more recently is talk about everything from property as an NFT, songs for musicians. We've had Emanate on the channel, the little Aussie project in the music industry, a couple of times. Again, I think they're thinking about having to build a bridge to Ethereum as well. This was a great thread by our mate DCL blogger, who is in our group, and he started doing regular posts for members on NFTs as well. So thanks for that, mate. I really appreciate it. I know the guys are loving your post, but check out this thread he did on Twitter the other day about why NFTs are catching fire. 25 industries being disrupted. Art, I won't go through it all today, but it's not just gaming. Really, really important to understand. Now, the past few days, we've had big projects like Wi-Fi and Andre come out and talk about tokenizing insurance as an NFT, tokenizing these music rights. We've got all these markets where people can trade. We've got memes that are trading as NFTs. So you can question what has value and what doesn't have value to different people. But remember, people place value on different things. And a lot of the time, there's this sort of sentiment and emotion that's attached to an NFT. Even if it's a childhood memory of a game you used to play, whatever it is, that's very different to someone buying a Litecoin. And you don't really, these different cryptos have their tribes and communities, but it's not like an emotional attachment to an individual coin. And that's where I think people are kind of missing the point a little bit, and why kids are just addicted to this stuff, to this gaming and buying the items and playing with their friends and swapping and trading. So, the soccer tournament they had, where the gold trophy that people won was made from gold tokens. The composability of what is going to happen in this space, in the digital worlds, proof of attendance protocol. Did you go to that conference? Let's say we're having a new crowd sale. I think I tweeted this the other night. We're having a new crowd sale for this awesome new gaming project, and all the big whales want to come in and buy the tokens first. So this project says, well, hold on. Who are the people that actually have been playing the game or attended the latest community meetup? And if they've got this proof of attendance linked to their Ethereum address, the project can say, well, everyone that was loyal community members, here, you guys get first dibs at the token price, or you get a better price. And all you whales, if you're just coming in to scoop up coins, but you haven't been loyal or part of our community, bad luck. So everything is just going this direction of being more fair, community-driven, DAOs, so decentralized autonomous organizations, where all the users are in control. And that's what we've seen in DeFi again lately. Now, some of those have blown up in our faces, like Sushi, where it was such a brilliant concept, but then the lead dev dumps his tokens. And yes, he came back and said sorry and gave the money back, but you can't just shit on your community like that. And obviously, I was pretty upset by that, because I did think that any project that tries to compete with more centrally owned projects and gives the power and the profits to the community, I love that idea, that concept. So we're going to see more of that in the DeFi world and in the gaming world. In terms of NFTs, like I just said, if you had to search NFT a few months ago, you would have had no results. And now all the big YouTubers are starting to catch on. We look at Google Trends, it's just ticking up here recently and breaking out to new all-time highs in terms of people that are searching for this word. So if you remember, our thought process and the way that we look at things with our research. So, we go from the fundamentals, the social media engagement, the sentiment, and you look at something that is considered dead and doesn't have many followers and it's down in price. And when we tie those together with fundamentals, that's when we can get in front of a big wave of money. And recently, even Missouri and Delphi are two of the leading crypto research companies. They put out a piece here in the last 24 hours about NFTs. Yeah, so Rareable is one again that we've covered in the community. Matt sent me a message about this the other day in the morning, and it was $1, and by the afternoon it was $10. So look, this is why the space is moving so quickly. But honestly, I think if you're thinking long term, look at the market caps. Don't worry too much about the price. Look at the market cap and say, hey, what's a realistic market cap for this project longer term? Can it get there? And this space is going to grow and do crazy, crazy things. So when the leading researchers are just starting to talk about this as well, the YouTubers, the technology's kind of there, the scaling solutions are coming for these gaming projects. Gods Unchained is a great example of one that's kind of already scaled. But I just love where this is all going. I'm so excited because it's DeFi, it's crypto, it's gaming, as well as the collectibles and the rarity and the uniqueness of it all. And some of the things that are going to happen are things that we haven't even thought of yet, guys. So look, mind blown. I have planted seeds in about half a dozen, a few more gaming projects, a lot of the D-Web projects. I've planted some seeds in as well. So look, I'm so excited about where we go. And look, I was kind of thinking the other day about, do we have to have one sector boom and not another? Projects like Synthetics and Aave, yes, they've had tremendous runs. But if they're the blue chips and they continue to lead and grow and they're going into the trillions in terms of funds under management, there's no reason why they can't keep growing. So I know it's insane that this project was, let's put it on log chart. I think it was a few cents when Matt covered it back in August in 2019. A third of a cent. So what's this? I think, is this nearly 200x now? 200x. This is just insane what these projects have done. But I listened to an interview the other day with Kane from Synthetics, and if you look at their roadmap and what they want to do, really trying to almost take over Wall Street and trading, hey, who are we to say that these projects can't keep going higher? But in terms of actual risk to reward, I do think that there are better opportunities. So if I was coming into the space brand new, I would honestly be looking. I think DeFi has had its run. There's a lot of bubbliness there, particularly in the yield farming space. There's some gems out there still. I think in between all the crap and the copycats, I think there's still a few exciting projects. But I would be looking more and doing my research and focusing on some of these other areas that are a bit more unloved and untouched and are just coming through now. And as you know, if we can get before the wave of retail money, but also VC, the venture capital funds, the guys that read all the premium research created by companies like this and our research reports as well, that's when you can get these big returns. That's why they're possible, because the spaces that they're disrupting, gaming, tens of billions of dollars, and it's just growing so fast compared to legacy industries. People are living their lives online. We've now got things like working from home, distancing. This just all plays into a narrative that is bullish for gaming crypto. So look, that's my rant about gaming and everything. Someone was asking me about Red Fox as well. So I did want to show you a chart. Now this has gone absolutely parabolic, and normally you should never buy a chart that looks like this. So as I said, it was half a cent, and now it's gone up to about 14 cents today. So it's done about a 30x return in a month. Now, what I would say is there was very few people that got to buy under here because it was only on the liquid exchange and there was almost no volume. So this might look like it's gone, absolutely gangbusters, and someone that invested $1,000 has now got $30,000. But the reality is that people were probably getting to buy $30, maybe $100, maybe $1,000 here. They're just not the liquidity on the order books. And when you think about the market cap, you say to yourself, well, what's a fair market cap, and compare it to similar projects and think about it in that sense. Well, it's currently sitting at around $11 million market cap. So you say to yourself, well, look, is this a bubble that's gone parabolic? Is it a pump and dump that's had no good news? Or is the reason that it was undervalued here at a market cap of $500,000 is because it was only on one exchange and no one knew about it and people thought it was dead, and now people are realizing it's getting to its fair value rather than a coin that's valued at $1 billion and it's pumped on hype and on tweets and all that. That's the way that I like to think about it. But look, always be patient. If you like a coin, dollar cost average in, wait till it gets listed on another exchange. We'll have a pullback. We always have big wicks, so set some orders. Be patient. That's the way you've got to play these smaller projects, and never FOMO. And if you think that you don't want to buy a chart that looks like that, forget about it. There's going to be new opportunities. There's probably going to be 20 or 30 good gaming projects over the next 2 or 3 years. If the narrative catches on like I think it has and like I've been predicting, I feel like we're just getting there, and I don't know, what do you guys feel? But thanks for listening to my rant. I'm going to have a quick look at some of your questions. And I will put it back to the Bitcoin chart for you all. As we break down a little bit here to come back and retest this area. All right, enough of my artwork. Okay, let's have a look at some of your questions. So thank you for joining me on a Thursday night, guys. How am I hanging? I'm hanging pretty good. Someone sold their free Uniswap. So guys, if you haven't already, you can go over to this Uniswap app. Let's bring it up. It was on my Twitter today, I think. And you can claim your Uniswap token. So if you've done trading on Uniswap or liquidity pooling as well, you're entitled, or you should find that you've got at least I think it was 400 tokens, was it? 400 Uniswap tokens, and they're currently trading around $3. So a lot of people woke up to a nice pleasant surprise of around $1,000 today. Is this site working? Yes, it wasn't working before. So, and the best part is that this goes to all your MetaMask addresses. So if you've got multiple addresses, you should find the tokens are in all of them. All you want to do is go over here, click the 3 little dots and click on Claim Uni, and it will tell you if you've got Uniswap or not. So if you're like me, I've got dozens of MetaMask accounts. I can't remember which one I might have done a Uniswap trade on. So go back through them and check them all, and you might have some pleasant surprises. Now, a lot of people dumped, and the price actually fell from, was it a couple of dollars all the way down to Uniswap on FTX. Oh no, that's the index. That's not what I want. UniUSD. Binance have listed this, haven't they? No. Okay, let's go over to our other USD. No, Uniswap not up yet. No, that's not what I want either. Okay, let's keep trying. Let's bring up CoinGecko. Basically, what I want to say is that some people, or most people, dumped, and that's why Ethereum gas prices went through the roof today. But I think that if you can get past that initial dump, and it started to grow again just more recently. So we're to get back up over $4 at one stage here. So people that dumped at $1, sitting there a few hours later thinking, geez, I wish I had held some. I could have sold at $4. Let's have a look at the fully diluted market cap here. Fully diluted market cap around $3 billion. Okay. I don't know. Do you think Uniswap's a $3 billion company? Possibly. That puts it right up here in between. Well, hey, I think Uniswap's probably got more going for it than BSV. Possibly Litecoin. It's doing billions of dollars of volume and fees. So, hey, anyway, let's not spend too much time dwelling on that. Okay, power through these comments. Someone's got 8 wallets. That's awesome. Well done. Why isn't this session posted in the members group? It is. I posted it you saw me post at the beginning of the video. Why would someone have 8 different addresses? Well, some people have different accounts on every web browser on their phone. It's probably better, to be honest, rather than using the same account for everything. Someone only came for the dad jokes. I think I had one before. There was a lot of dad jokes with the Kraken announcement last night with Jesse Powell and Jerome Powell. And Kraken got a banking license last night, which is a pretty big deal. If you have ETH on your ledger, do you get any Uniswap? Well, it depends if you've used Uniswap. If you've used Uniswap from your ledger, plug in your ledger, go to that website, you should still get a drop. Back to going mental, I think there's just a bit of a renewed interest. Well, I think it's from MicroStrategy. I just can't understate how big of an announcement that is. Think about the billions and trillions of dollars that is now, even if 1% or 0.1% of those people say, let's add some Bitcoin to our balance sheet. Very, very quickly, within a couple of weeks, it can become the thing that everyone decides that they're going to do, or at least all the tech companies. I heard the US might be thinking of keeping China's 1.5 trillion of US bonds to compensate for losses due to COVID. There's a lot of rumors going around about whether or not the US are going to treat some bond holders differently to others, or if some countries selectively default on other countries. If you start doing that, trust is lost in your bonds, in your currency, in your government and politics and trade. And that word trust, again, everything that is happening around us is setting up a bullish environment, just another bullish reason for Bitcoin and cryptocurrencies where you don't have to trust anyone. You know the monetary policy, there's no one to pay you back or go into debt or whatever it is. And now we've got Bitcoin that's being wrapped and put on Ethereum and into the DeFi world. You can get an interest rate on Bitcoin. So again, it's just better than a bond. Not a lot of questions. Well, guys, I might wrap it up. I have really enjoyed. I do like these hangout sessions. Let me know what your favorite gaming projects are as well, particularly members, those of you that have been doing write-ups and sharing your favorite stuff lately in research. That's awesome. All eyes on the market. I really do think that there's a lot that is about to happen depending on which way the dollar breaks. And if Bitcoin can just, we're just so close to edging over that mark. And if we can get over there and get that weekly close, if we've got these central banks printing and staring down the barrel of how do we spur the economy going, there's going to be new catalysts. I mean, this is very, very exciting. And hopefully if you're watching this video, you understand what is happening around you when the 10 of your friends at the barbecue say, wow, what's Bitcoin? Is it too late to buy? And you explain to them what it is, that type of thing. All right, guys, have a good night. I hope you've enjoyed that. Please smash that like button. Keep spreading the love, and I hope we can get to 100,000 subscribers before the end of the year. If you want to join our members area, just head over to nuggetsnews.com.au and get in before the new platform launches, where some of the prices will be going up. So thanks for joining me, guys. I'll talk to you again soon. Cheers.